All righty, traders. Good afternoon, good morning, good evening, and welcome to a show that has been really put on the side for too long, and we are back. We are back. We are back. All right, traders. We're going to go ahead and take a look and see what's going on in the market. We're going to break down the gold price, Ethereum. I think if you haven't invested in Ethereum, you might want to consider. We're also going to go ahead and take a look at some currency pairs. We look at 8 currency pairs. We're going to actually put some trades in. We're going to break it down. I'm going to show you tools that I'm using that helps me to be able to manage my risk and understand exactly what the markets are doing and put perspective into the market as well. We're going to talk about that. It's called the Smart Entry AI Bot 2.0. Fantastic. It's going to be doing some great wonders for us as we move forward in 2025. But traders, without further ado, let's go ahead and get started. I'll see you back right after this. All righty, team. Welcome back. Well, listen here. I'll tell you something. It's I haven't done this for a while, so I've been working on a couple of things in the background, getting some things sorted out, so we can go ahead and get a lot more of become a lot more effective in the market here in 2025. If you haven't already noticed, the markets have been pretty slow, specifically over the last month, and it's been moving back and forth. We've seen some good results, and the markets are still showing some good pip opportunity, but it has been slower than usual. We're not seeing the volatility as we did see between, let's say, November and February, especially with, of course, the new things that are coming to the new administration. Tariffs, tariff wars seem to be settling down as everyone's starting to sort of like play the game that is being played, and it seems to be working, and things that seems to be sort of like chilling out when it comes to volatility. Now, traders, we're really going to go ahead and dive into the market analysis because I think it's important that we understand exactly what the markets are doing. And I know there's a lot of traders that have got different types of positions and are holding different types of trades. But the one thing I must mention, especially right here in the beginning, is traders, you've got to be patient. All right, got to be patient. There's too many traders out there that start off with a strategy, and then as soon as things start slowing down, they think that the grass is greener on the other side, and they start switching and changing, and they want to do this, they want to do that. And then they miss the whole big run. I mean, as a good example would be this, right? If you think about Bitcoin, how Bitcoin was trading between, let's say, $100 to $500 for a long period of time, and then it broke out, right? We had that big breakout, price moved up, and then you start seeing people jumping on that trade, right? They started jumping into Bitcoin. And then we saw it rallying all the way up to 10,000, and eventually it spiked up all the way up to 20,000. And then it pulled back all the way back to 5,000. And when we had that big jump and that big move out of the market, a lot of people were afraid to get in because they were afraid to buy at the top, right? And then we had the market pull back again, all the way back to 5,000, from 20 to 5,000 again. What happened? People panicked. People got scared. People decided, no, I'm not going to get back into Bitcoin. This is not where I should be. And then what happened? They started fearing. They got out of the market, and then they probably looked at other sorts of investments. And what happened since then? It moved from 5,000 all the way through to 109,000. And if you actually think about it, what type of return on investment would you have got? Well, how long was that? We can go back to the charts and take a look at the dates. Let's say 2017 to 2025, and that is what? It was actually 2024. So we could say that was a 7-year period, right? So in 7 years, the market moved from 5,000 to, let's say, 110. Let's just round it off, 5,000 to 110. And if you do the math, that is, and I'm going to just go ahead and just make sure I'm getting the details here. So 110 divided by 5, 22. All right. So that's 22 times, all right, that the market has moved up. So you had 2,200% increase in your investments. So if you invested $5,000, just as an example, you would have made 22 times your money, $111,000. If you had invested, let's say, $100,000 at the time, you would have made 2.2 million after 7 years. Traders, think about this. What type of investments can you put money into that you don't have to do anything? Just invest in something, let it ride, and make 22 times your money in 7 years. All right. Not a lot of the stuff, not a lot has been happening. I mean, even the stock market, even a lot of the stuff, you're not going to get these type of returns. But you know what happened? It was the people that were patient enough to wait it out that started reaping the benefits. And that's really where it comes down to. You've got to be patient. Look here, we've got multiple strategies that we're looking at. You know, Dow remote, we're looking at DAX remote, we're looking at Asian market shift, we're looking at the market chaser, the hedge finder, the Trier factor, which is doing really well. But then too many traders coming to the start investing, and then when they invest, the first month it might be they're expecting 5% return, and they get 2% return. They go, well, it's not working for me. Well, let's put it this way. Let's say they break even. Let's say they swaps and maybe they made some bad decisions and closed out a little bit early on certain trades, and they came out at break even. Straight away, they at break even, they want to go ahead and look for something else. They're looking for let me move into something else. Let me find something else. Always looking for the shiny object. Traders, I'm going to tell you right now from a trader that's been involved in this market for over 30 years, just be patient. All right. Move your money around, look for other options, but don't give up on a strategy, or don't give up on a investment vehicle just because it didn't do what you expected to do in that month, maybe 2 months, maybe even 3 months. Sometimes it takes even 6 months. But eventually, traders, the markets eventually break out, and the system and everything else does start paying out. It does. You've just got to push through. All right. Now, traders, we're going to go into a couple of things here, and I'm going to need to put on what these called are my computer specs. It helps me to see a little bit clearer. All right. I need this. Okay. All right. Age is catching up on me. All right. So here we go. We're going to go ahead and take a look and see what's going on in the market. Now, we're going to dive into this one right here. And by the way, I hope everyone's having a fantastic week. I hope your year in 2025 has started off great. I know I haven't been around for a while in these live sessions, and we're going to go ahead and get these live sessions going a lot more. But I want to go ahead and make sure that everyone is sort of like in tune of what's going on in the market and exactly how I look at things. All right. So let's go ahead and dive in. Traders, you guys have got a really good opportunity today. We're going to look at a bunch of trade opportunities. You can see right here. If you follow my trade signals, which is the market chaser right now, you notice that we haven't got any trades in on the euro, US dollar, and the US dollar CAD. We're going to go ahead and see if we can place a trade today and get a trade in. And then also, I'm going to show you how my new tool is going to be able to help us manage our positions. Now, I'm also going to go ahead and put in some bonus trades today as well. All right, so bonus trades today. And then also for those that are following me on my Telegram channel, especially there's two Telegram channels. I'll give you both of them in a minute. But I'm going to also look at 5. I'm going to look at all 5 of those currency pairs. All right. This was our sort of our trade battle trades that are going to be posted inside the Traders Network Club Telegram channel as well, where you can follow those trades along the way. And I'm going to show you how my dashboard and all this good stuff, all these trading tools that I use, that I myself put together, and looking for ways to be able to manage my positions better. All right, so we're going to get into that in a minute. All right, and we're going to go ahead and place those trades. I'm going to break the market down, show exactly what it is that we're looking for, and how we're going to go ahead and trade that. Now, firstly, number one, traders, let's go ahead and talk about gold and Ethereum. All right, so firstly, I'm going to move to my weekly time frame right here. And if you look at my weekly time frame, we've got a couple of things. Now, the 4-hour time frame is not a major support level, but the weekly is. And look how the markets have really moved through this. Now we're moving towards the end of the week. When we see the market doing something like that, where it spikes through and then comes back up and closes up back here, it's telling me that price is respecting that level. And with a fair value gap, especially specifically a weekly fair value gap, if it holds here, then the likelihood is that we're going to continue to trade inside this range. What range are we referring to? Well, if I look over here, traders, you can see that we have a high over here, right? Here is a high. Here is a low right there, all right? Now, what's going to be important is that gold closes above that previous low and, of course, above this fair value gap. When we have that setting up, then we're going to probably expect gold to go ahead and move up. Now, traders, what does that mean for you as a trader that trades gold? It means that what you should be looking for is some sort of pattern that's developing that's going to confirm that we're going to see a change of state of delivery from being bearish to now bullish. So next week, we may have an opportunity to start buying gold again as price starts working up. Now, I'm not going to say just go ahead and buy gold. I'm saying, hey, let's wait for the opportunity, right? So what is the opportunity? Well, if I go down to my lower time frame, you can see here, this is the 4 hour. We can go down to a 30-minute time frame if you look for something more intraday. And so what I'm looking for right here is, number one, this is that, let's just kill that 4 hour fair value gap here for a minute. All right, and let's pay attention to the weekly fair value gap. If you take a look over here on the 30-minute time frame, what do we see? Take a look very carefully. Look at the details. All right, you hear about me. I talk about it a lot. If you haven't followed me on Instagram, go ahead and check out Instagram, FxBigDog. Follow me on Instagram. You'll notice that we talk about accumulation, manipulation, and then distribution, right? What do we need to confirm distribution? We need a change of market, market structure, right? Here we have it. Price has gone down. All right, we had a lower low, then we took out the high. We had a good market displacement above, and then price moved back down. And once again, notice that the weekly fair value gap is becoming a good, clear support level for the market as it develops these patterns. And so as it develops these patterns, what are we going to look for? Well, traders, first in the morning, if you look over here, here is a 30-minute time frame. We've got a fair value gap sitting over here. When price trades on this side of the fair value gap, takes out the high, we have once again another confirmation in the short term that price is going to move back up. This is the type of thing that we'll be looking for next week if we want to find some buying opportunities on gold. Now, we'll be running some live sessions next week. Make sure you guys are subscribed to this YouTube channel. And if you're not subscribed, go ahead and do that right now. All right, subscribe to the channel, like, share, and we'll get into some of these trades next week, specifically on gold, because I think we got a great opportunity where gold can move all the way back up to reach the top of the range again at $3,363. All right. Now, if you are looking for opportunity, gold is certainly going to present one, and it looks like it's going to start off next week. We'll have to wait for the steps, wait for the confirmation. Remember, that's part of the process. We're going to have to wait for that to happen. Now, let's go ahead and take a look at Ethereum, all right? Ethereum, and I'm going to go to the weekly time frame, right? Ethereum has broken out of this accumulation here. All right, so we had a couple of things here. We had a large bit of accumulation. Market broke out to the south side. What did it do? It came back to a monthly order block. If I go to the monthly chart right here, we can see right here, we got an order block sitting over here. Price went ahead and tested. And look at that beautiful, beautiful little wick to the downside right here, confirming that the market's respecting that level, and then turn around and head back up north. All right. Now, if you've watched my live sessions, I spoke about this a couple of months ago. I said, guys, especially when we started seeing the market move down, I said, traders, price in Ethereum is starting to shave off, right? Which means sell off. And because it's selling off, this is actually creating a great opportunity. This is when tariffs started kicking in, all right? When Trump started pushing all these tariffs across the world. We saw Ethereum starting to sell off, and quite a bit. Now, in the interim, when we saw that sell-off, I said anywhere between 1,400 to 1,500 is going to be our buy zone. Why is that? because traders, it's just right here. Look at that low. It is at 1549. So anywhere below here is where we want to buy. And if we have the market now, it could be could be spot trading Ethereum, or you could be just going with Coinbase and buying and holding. All right, that coin. Now, if you looked at this area, I looked at Ethereum and I looked at Bitcoin, and I said that Ethereum has a lot more upside potential in rate of return than Bitcoin has. All right. And also, what's happened with Ethereum is that we've had major adoption in Ethereum. We've seen major investments coming into Ethereum specifically because of the upgrade or Ethereum upgrade platform. So all of these things are starting to bring back a lot of investing and interest in Ethereum itself. And so buying in at around about between 1400 and 1500 was a great place to get in as we start looking for price to move up. Now, let me go back to the weekly here. What I'm looking for here on the weekly time frame is I'm looking for the market to trade well above this area. You can see I've already got alerts here about 2,870. Now, why is it that I'm looking for that to happen? Because you can see here we've got a weekly order block right here. I want to see the market disrespect that and trade above that. When that happens, we have the potential to go all the way back up here to 4,000. And then these equal highs right here, there's a lot of liquidity sitting up here. We're going to see a liquidity run through that area. And then the next upside target is going to be up here at 4,800. Now, just an example, if you do the math, if you threw in, let's say $100,000, okay, let's say you invest in big, even if it's 10K, right? You can just do the math on your own, 10K. And then if you bought, let's say 100, if you take 100K and you divide that by 1,500, all right, hang on, 100,000 divided by 1,500 equals 66.6. So let's say 67. So 67 coins. You buy 67 coins at that price and you sell it at 4,800. All right, 4,800. You've just made yourself 321. Well, actually, you made yourself $221. That's times 2 of your investments. All right, that's twice your investment that you put in. That is just price moving back to the original high. And remember, Bitcoin has blown through that original high that it originally had. It's making new highs. Of course, 109 is another new high. But once we get through that, we're going to be able to get in on that trade, and we're going to be able to manage that position again. All right. And so we can decide on whether we're going to take a profit when we get to 4,800 or just let this thing break out. And we're probably looking for around about, I've already done sort of calculations here. When we break out of the high here at 4,800, we're going to see another good run on this, at least up to this area, which is at 6,100. And then the possible move towards 7,800. And traders, we could be on our way to around about 25,000 on Ethereum. Now, we're talking maybe 5 years down the line, maybe shorter than that, but it definitely is a target to the upside, especially with all the adoption that we're currently seeing. Now, if you invested 100K and you go ahead and say, if I bought in with 100K, 1,500, and it goes all the way up to, let's say, 25,000, do the math. All right, let's do that quickly right here. Now, traders, this is, we said 68 coins times that by 25,000. Now we're looking at 1.7 million. Now, again, that's just a buy, hold, and keep it for 10 years, 5 to 10 years, and that's the type of returns that you can make. Can it happen? Did it happen with Bitcoin? It took 7 years for Bitcoin, all right, 7 years for Bitcoin to move 22 times the value. 22 times the value. 22x's on that. That's huge. That is huge. All right. Now, obviously, I'm not looking at any sort of altcoins or meme coins. We're talking about solid coins here, stable coins here that are going to produce good results. Now, traders, let's go ahead and dive into some currencies. All right. Now, remember, traders, you've got to diversify how you trade. You have to diversify. And so I'm not just talking about in currencies diversify, but you have to diversify in other instruments like gold, and different types of gold, property, crypto, rentals. All right, definitely have different streams of income if you want to be financially stable, and or at least have good finances with multiple streams of income. You've got to look at these type of different vehicles to invest in. All right, now let's move on to I'm going to go to, let's see, let's pull up the Aussie Canadian dollar, and let's talk about the Aussie Canadian dollar. And I'm going to go ahead and put some trades in on this morning. I'm going to show you a couple of things here, and I'm going to use. Let's go ahead and do this. I'll place the trades here, and I'm going to do what is it? I said Aussie Canadian dollar. All right, so let's go to Aussie Canadian dollar right here. Now, before I enter, I want to go and explain something, right? But I want to show you something here. If I choose to enter on the Aussie Canadian dollar, all right, what I'm going to do here is I'm going to look for reasons to want to buy or sell. Now, traders, as I look over here, this is almost like a no-brainer for me. If I see the market here on the weekly time frame showing that we're respecting that weekly high, but also notice here that we've got a monthly order block, and sure, the month hasn't closed out yet, so I really can't use that as much, right? Because we still got 2 weeks of trading. But if I look at this right here, this weekly candle right here shows me that at least, if anything, at least what we're going to see here is we're going to see this become a range candle. And if that's manipulation, then that means the market should at least come down to this low right here. Now, if I go ahead and measure this out, and I take a calculator right here and measure the low of that candle to where we currently are right now, it tells me I've got a 68 pip opportunity. 68 pips. Now, I could go ahead and say, I'm going to trade in this weekly range, which means I can make a decision that I'm going to sell here and continue to sell inside this weekly range. And if the market trades above that, I'm going to go ahead and stop trading. I can make the choice, and I can even make a decision. If I get a bullish candle break above like this, I can make a decision that I'm going to cut my losses and get the heck out of Dodge. I have that choice. All right. But a lot of traders don't really know what to look for. They don't really understand what to, how to pay attention to these details. And then they just simply get lost. All right. And so I'm going to give you some more input here. When I look at this right here, the first thing I want to do is go down to the lower time frame. Now I could go to the 4 hour, and I'll look over here on the 4 hour. And on the 4 hour, I noticed that we had here on the 4 hour. Let me just change my color here. Let's go with the black. Yep. So notice on the 4 hour that we had a high, we had a low, and then we had a new high right here. Already, this is telling me we have a market structure shift. This candle next to it right here, right? We had a nice expansion candle below that low. Then we had a retest. See how the market retested? See that wick there? So all of this stuff on the 4 hour time frame can be seen on my lower time frame. So I can move this down to a 30-minute time frame. And I can look over here and I can see the same thing. Check this out, right? Here is the high. There's the new high. Here's the break of that low. There it is there. Here's the retest. Here's the entry point. Here's the sell-off right there. Okay? So now we look at this, we go, okay, well, hold on a second. Is the market going to continue to move down, or are we going to move back up again? Well, based on the weekly close candle like this, I'm going to suspect that we're going to see there may be a retest of equilibrium of this candle, which means 50% of the candle, the market can move up to 50% and then drop back down south. But at least I know my bias. My bias for now would be bearish on this particular setup, at least based on this candle wick. So that means that if I sell anywhere on this retracement, I should be good as long as I know that if the market stays below that high, I'm going to be good and I can stay in that trade. So traders, I want to sell this. I want to sell the Aussie Canadian dollar. So here we go. I'm going to go to the Aussie Canadian dollar. And let's see here. Oh, hang on. Aussie Canadian dollar would be. All right, let's see here. What have I got? Oh, yeah. This is it right here. Yeah, I was at it. So the Aussie Canadian dollar, here it is. So what I want to do is I want to go ahead and sell. Now, this is the thing, traders. I want to show you this tool I'm using right here. Notice what we have here. We have here on the left-hand side, we've got the Aussie CAD. We've got buy and sell. We've got close. We've got new message here. Don't worry about that. That's just because this is a bigger version, or at least the instructor version. But you notice over here as well, we've got master status. We've got master break even. We've got the master trading tool. Master total trades. We've got the master date and time. And then we've got the status here. Now, this is the current status of my actual positions. All of this down below here is based on my positions here on my chart. So I manage my own risk on this. And I think this is important for everyone to note here. All right. What is important to note here is that you're getting complete information about the markets right here by simply looking at this dashboard. What is this dashboard telling you here? This dashboard, number one, is telling you what the master count. For those that are following my trade signals, here is the amount of trades we have. Here is the last date and time that we entered the last trade. Here is our break even on the master account. The break even is at 88.19. Now, how many of you are following our trade signals want to always know, what is your break even, big dog? I always get that question. Big dog, what is your break even? What is your break even? How many trades do you have? How many positions? How many operations, as you call it, right? How many you ask me that? Now you get inside information about what that is. You also get, of course, the direction that we are currently trading on the master account as well. So you know the direction, you know the break even, you know how many trades there is, and you also now know the last trade that was implemented on the system. All right, you got all that information that gets updated for you on a regular basis. Now, this is your trade. This is where this is important for you, because this is where you decide on how to manage your risk. So before I jump in a trade right here, I'm going to go ahead and show you something here. Actually, you know what? I'm going to go ahead and implement the trade right here first. All right, so let me go ahead and implement the trade. So we said we want to sell. So I'm going to go ahead and make sure my settings are correct. And I'm using, I've got a choice here. I can use risk percentage, or I can go ahead and use fixed lots right here. I'm going to use fixed lots for now, okay? And I'm going to explain to you what that means as well, all right? So I'm going to go ahead and fix lots, and I'm going to go ahead and sell. All right, there it is. All right, I've emptied the sell right now. Now, on the system, you can see here, traders, it's telling me where my take profit's going to be at right here, all right? And then also, notice right here, it gives me my entry one. And look at, this is the most important thing. It's a $1,000 trading account. Just want to go ahead and show everyone, full disclosure, a live trading account. $1,000. It's telling me what my, this is all the information the system's telling me, okay? It's telling me how many lot sizes I've now entered, which is only the one entry, which is one micro lot. It's telling me my used margin. It's also telling me that it's active, and it's targeting this level. There it is, 8,930. It's telling me I've gone bearish. It's telling me the trade bias, the actual bias of this particular pair is actually bearish. So I'm trading in the direction of the bias. There's my target, including spread, 24 pips. Here's my break even. My break even point currently right now is 89.50. It's also indicated here on the chart, right? Then it's also telling me right here what my active P&L is, not only in dollar value, but also in percentage value. All right, these things are important. Check out the line below that. All right, it's telling me my estimate margin used. This is going to tell me what I'm going to be needing. All right, and this is if I trade all 15 of my positions. See, yeah, I've got all 15 lined up here. If I trade all 15, this is my estimate margin required. Right, I'm going to need $192 to trade all of these positions. Traders, this is how you can work out and make sure that you're on the right track, that you don't go wrong. Okay. Now, check this out. Drawdown. It's telling me, and this is actually, this will be a running drawdown. So on this trade, currently right now, my drawdown has been 0.03. All right. Now look over here. It's telling me how many trades I've got entered. And then here it's telling me, this is the important part. It's telling me what my estimated risk is going to be. Look what it says here, $44. Why is it $44? Traders, is adding up, all right? It's adding up all of this right here. All right, look here on the dashboard. See the maximum risk? It's telling me that if my stop loss, which means if I decide to make a cut, if I cut my position when the market changes bias, and that's going to be at 90.48. So 90.48. When the market gets to 90.48, I have to make a decision. Am I going to get out of my trades, right, and focus in on closing out of my positions because I've hit my maximum? If I'm doing that, this is what my estimated risk is going to be, 44.47. Traders, this is crucial because a lot of traders don't know what their risk is going to be. And sometimes they start off thinking that their lot size is perfect, and they enter with their lot size, and what ends up happening? They end up over investing, all right, or over exposing themselves. So this is going to tell them. But listen here, there's another thing here that's so important, all right? As you look down here, you can see where the entry points are. Notice that our stop is indicated around about 90.48. So if I keep going down here, notice that 1948 is right here. After level 5, what happens? 90.50 comes into play. All right, that's the next entry point. That's above where my stop's going to be. So which means, traders, I have to go ahead and reduce. If I only want to trade inside that range, all right, if this is the range that we trade in, right, that's a candle wick of the weekly, and this is all I want to trade. I want to trade inside this range and nothing above that. Then that means, traders, that when the market gets to 90.48, I got to stop trading. So that means I can only trade 5 positions, and that way I'm risking. So let's do the math here. So if I go ahead and change my system here, and I reduce it to 5 entry points, and I say okay on that, look what the system goes and does. Now it's going to recalculate, and you can see right here, based on this, all right, based on this, 5 entry points, my estimate risk is going to be 2%. All right. Now, what I can also do is this. Traders, I can also increase my lot sizes as I go away. If I decide to do this, and let's say I change it now to percentage risk, and I go to percentage risk here, and I say I want to go with 0.25% on each trade, and I go ahead and say okay on that. Now it's going to calculate those 5 entry points, and it's going to go ahead and increase the risk. You check my lot size. My lot size only increases just because my account size is small. My lot size increases at the 5th trade right here to 0.2. But look at it. It's making sure that I'm trading with 0.5. Now keep this in mind. Check this out. Notice that the first trade, my risk is actually 0.7%. That's higher than my 0.25. And the reason for that is because it's only $1,000 trading account. I cannot get in a trade and place a stop loss at that level and risk 0.25% on my trade. The most I can risk is 0.7%. All right. So, and that's the reason why it's showing there. So this trade for me, if I make a decision, and this has been something that everyone's asked me, Big Dog, where can I put stop losses? If I want to put a stop loss, what is my risk going to be? Now, looking at the details now, you now can understand what your risk is going to be on each trade. So you know that your estimated risk is going to be 2.21% on your trade, right? And you got 5 entry points, and then you're going to cut your losses, all right? You're going to, at that point, you're going to say, I'm done. All right. And you can actually include a function here where you can go ahead and make a decision that you want to go ahead and close. There it is. All right. Enable candle trail and close. Here it is. It's set to false right now, but if I set it to true, it's going to close, and I can use that to close instantly, or I can use it at a certain time. I can close at a certain time, but the orders will close. Once the market breaks that level, we can close immediately and not wait for the market to confirm a certain level. So we can go ahead and say, and what we can also do is pay attention, put alarms, set an alert at that level. When the market breaks that level at 90.48, call it a day, cut your losses. Now, traders, I've always said this, don't go ahead and cut your losses when the market is still active. So when we have a trade that is going to be set up, something like this, and let's say we decide that at that level, we want to close out, all right? Not stop loss, but we want to close out at that level, right? If this is an active candle, do not close out when the market trades through here until it's closed candle, because this could be just a liquidity run, all right, or liquidity sweep. The market could do something like this and then close out back below here. And all it's doing is cleaning up stops. Watch out for that. Clean that stop before it heads back down south again. So be very careful about putting fixed stop losses at those levels. Our system does exactly that. It has a pending stop, which is not active with a broker, which means that the market can manipulate through that without taking us out of the market until the candle closes. Only once the candle closes, then it confirms that price is breaking that level. And only then do we want to go ahead and make adjustments. All right. So traders, we're in on that trade. All right. Now, a couple of features I want to go ahead and show you here. All right. Number one, I want to go ahead and show you here that you could actually go ahead and manipulate the system too. If I want to go ahead and say, hey, I'm going to, let's say, want this system to trade automatically, I can do that. I can change it to automatically right here. And now it's set to auto. Notice right here, I've got no buy and sell buttons because it will automatically place trades for me. Now I can set the parameters. I've got to set some filters in here. I can say, all right, let's go ahead and look for the bias. Trade only in the direction of the market bias. There's true. Okay. The next thing I can do is I can say, when the market confirms a lower time frame bias change, let's use that as a confirmation. Now I could go ahead and say, no, let's forget that. Let's use the master account. So whatever the master account is doing, if we look over here, right now, I don't see anything on this master account because we don't have any master account trades on this. But let's look at, let's change the symbol and let's go to, if I did Aussie CAD right here, Aussie CAD, let's take a look at let's look at the signal. Oh, I'm using bread and butter trades right here. Actually, no, that's a good thing. Bread and butter trade right here. Let's change that to, by the way, that's the bonus trades that you guys get. All the bonus trades you guys get is called the bread and butter trades. You can now look and see what my signals are on that. But let's go to the market chaser here. Let's see here. So on the market chaser, on the Aussie CAD, there's that trade that we spoke about. It's the bearish 17 positions. So now what I'm going to do is I'm going to change this. I'm going to say, let's trade automatically. All right. Let's go ahead and use the market bias. All right. And what we also want to do is we want to just use the master signal. So when the master signal says bearish, we want to go ahead and trade that. So we set it to true. Now, if I go ahead and push that OK, we'll see over here it says wait in. All right. Now I'm going to go ahead and see there's no trade. So it's waiting. All right. Waiting for an opportunity. Now, if I said, well, you know what? I'm going to do this. I'm going to set the automation off. And I'm going to trade this manually. Now I've got my buy and sell buttons right here. Now, remember, I've still got my filters. And my filter says that I only want to trade in the direction of the bias, which means the bias currently right now, look at the direction. the direction of the bias is bearish. And also, I want to trade when the master signal is also in the same direction. So I'm going to go ahead and say, perfect. Now I'm going to sell. Now I'm going to go ahead and put the sell in. Let's take a look, see what happens. You see what it says here? Reset. The reason why it says reset is because it will not enter a trade on this pair unless it's within 30 minutes from the last entry point. So it's helping me to avoid getting in on a trade when the trade is already come and gone, and it's been gone 30 minutes, more than 30 minutes ago. All right. So it says here, hey, my last trade that I entered was on the 13th of May at 1600 hours. What is today's date? Today's the 16th. That's been 3 days ago. It's not going to put me into the trade because the trade's already gone. So if I want to get in on this trade, what I'm going to have to do is switch off that filter. So I go over here and I say the master signal. I'm going to switch that off. Now I'm only going to use the bias as my filter, and I'm going to execute. And now I'm going to go ahead and change it here. Let's reset. Boom. There we go. Now it's entered the trade. All right. And traders, and this is the great thing about this as well. I can send a message. So this is the instructive. I can send a message to all my users that are using the software and say, and I can send them a message and say, we just we see the Aussie, well, at least we see a weekly manipulation candle. All right, selling today, or sell today. All right, or let's say sell in today. All right, there it is there. Send the message. Now, message has been sent. All right, now let's go take a look here. Oh, this is, I got an issue with the server. All right, so I can send the message, and then as soon as the message is sent, then what's going to end up happening is this right here. Let's go ahead and the system will automatically be posted here. So you'd have the system posting here as a message. It'll post a message and let everyone know. All right. Let's go take a look and see. All right. So we're going to go ahead and dive into some more trades here. So now that you know how everything works, let's go ahead and dive into some more trades. All right. So that was, so let me go ahead and see. I placed a trade on this one right here. This is the Aussie. Let's go take a look at the Euro US dollar. And I want to look at the Euro US dollar as a trade. Here we go. Euro US dollar. All right, let's take a look here. All right, so we got there's got the 4 hour right here. We got a big, look at this, a big move right here. Notice that we've come to this this 4 hour fair value gap. There's something down here. What is that? Is that a daily fair value gap? All right, so traders, the one thing I noticed over here on the daily is that we've had the market go ahead and look at this. Here's a bearish. All right, so that's a bearish bias. Market's gone ahead and manipulated here on the top. So we're heading down to the bottom right here. We're probably going to take out the low down here. So I could say that we're probably heading further down south on the Euro US dollar. So because of that, I'm going to go ahead and short that pair. Let's go do this. Euro. I'm going to sell Euro right here. And let me double check my settings. It's using risk percentage. I'm going to go with lot size for now. And let's just wait for it here. So I want to make sure that I'm not using any filters here for now. Okay. All right, let's go ahead and sell. All right, there's the sell. Now look at the risk. All right, so if I look over here, I got my stop loss is at 1580. 1422 is my last entry point. So this is my total risk. So traders, this is so important right here. All right. So you see here what the estimate risk is. If I entered on all 15 positions with only one micro lot because of a $1,000 trading account, my risk is going to be $400. That's going to be 44% of my trading account. Dude, if nobody can survive that sort of risk. So either I've got to put more money into this account so I can reduce the risk, right? Or I've got to go ahead and reduce the lot sizes, which I cannot do because I'm at the minimum lot size, right? What is my next option? My next option is to only trade certain currency pairs with certain stop losses, right? Which means I've got to go ahead and make a decision. And my decision might be that I can't let the market go all the way over here to 15 entry points. I might have to make a decision if the market takes out maybe a weekly range high, or I have to go ahead and say I can only enter with so many trades. So if I'm looking at my my risk right here, if the market goes all the way to that entry point, that's 4% risk on just that one trade alone, right? So traders, this is why when you look at this now, obviously my analysis has improved my chance of me making profit on this trade, right? So what I've got to do is I've got to make sure that, hey, listen here, if I'm right with my analysis, then we could see the market do something like this. Come back into this area where it's going to go back and retest maybe this low. It's going to come back, retest here. So we're probably going to have to add some more positions here. But what I might have to look at is that if the market takes out that high, what is that at 12? All right, 1220. Maybe that is where I need to start making a cut. So if I look at 1220, all right, 1220, and I go back to my my system here, and I look at 1220. Where's 1220? Up to this point. All right, there's 1222. So it looks like only 4 entry points I could enter. If I enter with the 4 entry points, then that means that I can reduce my risk if I drop that down to the 4-hour range high. So if I do this, if I change my bias here, all right, to let's say the main candle, sorry, to let's say the 4-hour time frame. Now let's see where my stop's at. My stop's now going to be at, look at there, 1205. Right? So 1205. Now, if that's the case, where's if I put my last entry point at 1205, that means I can only enter 4 positions. Look at that. 4 positions. And that means, traders, that I'm looking at my risk to be about 1.25. That's going to be my total risk, 1.25. Because if I go ahead and do this and drop this now to 4 entry points, and so I can only enter with 4 entry points, what is that now looking at? Now I've managed to look at my risk. 4 entry points will mean that the last entry point is at 1202. I'll lose a little bit on that if the market gets me. But once we get to 1205, I'm going to get the heck out of Dodge. All right. So what I'm doing now is I'm now looking at this and saying, if the market takes out that high, this is the high right here, this candle high, and that is at 1205, then I pretty much want to cut my losses. Now I can go ahead and set an alarm right here and make a decision on that. All right. When it gets to that point. But I've got that choice. I have that choice to make that decision. All right. I don't have to follow the master account and have all these more. I may not have the same margin, may not have the same trading account. I may not have the same money to invest that can allow me to be able to put lower risk in to be able to minimize my risk on each trade. But what the smart entry is able to do here, it's able to help you manage your risk so that you know that if the market does a certain thing, and that is take out the high. I'm willing to cut my loss on that trade and get the heck out of Dodge. I'm risking 1.34%. It's an acceptable risk for me for this particular trade. See how I've managed it? All right. Now, traders, obviously, with traders with larger trading accounts, you have a choice to do this. You can even go ahead and say, let's use risk percentage. And let me reduce my risk to 0.1%. On each trade, I don't want to risk more than 0.1%. Now, on this account, may not be able to do that, but let me go ahead and enter. Now, look here, as I change my risk, it's going to update. Server's running a little, looks like, there we go. It's on every tick. It'll update on every tick. All right, so here we go. Now I look at my risk and say, okay, when I use risk percentage, only the last trade, which is right here at 1202, is entering 3 microlots. But every other position keeps me below, it keeps me with 1 microlot. And that 1 microlot is not enough to put me below 0.1% because my account size is not big enough to handle a 0.1% risk for that stop loss. All right. Could I reduce my stop? I mean, I could go down to a 1 hour time frame and put my stop above a 1 hour time frame, or even a 30-minute time frame. I have that choice. All right. But I wanted to go ahead and show you guys how you can manage your risk. All right. How you can manage your risk on each position so that you don't have to follow the trades that have been done. Now, let's go ahead and take a look at, let's go back here. Let's go look for another trade. So I've got in on the euro, I've got in the Aussie. Let's take a look at the US dollar CAD right here. Let's put a trade in on the US dollar CAD. So here's the US dollar CAD right here. And US dollar CAD traders, based on what I'm seeing right here, look at the weekly. All right, it's breaking through here. It's here at this weekly inverted bullish order block right here. Traders, I think we're going to get some rejection of that. The 4 hour time frame, it looks like it's trying to push towards those equal highs. So we could get the market to push above those equal highs. And that's around about 27 points. Now, I can just make a decision to go ahead and trade that. And then I can say that, hey, if the market trades below this low right here, let me get the heck out of Dodge. So I can enter as much as I want to go ahead and enter here. But as if the market takes out that low, I want to get the heck out of Dodge. All right. We're expecting prices to take out these equal highs, sweep liquidity, and then turn around and hit back down south. Let's take a look over here on the. So this is the weekly. The weekly is also showing that it's respecting this. So there's going to be, you see, there's going to be a change of bias. The market's going to actually confirm a higher bias. So traders, because of that, I am expecting the new candle open up here, sweep the high right there, and maybe show an indecision candle to respect this inverted weekly order block, and then head back down south again. Right? It's a good possibility. It's a very high probability. So this is why I go ahead and look at the way I do. All right. Let's take a look over here. And let's take a look at, so do I want to trade the US dollar CAD? Probably not. But I did want to sell, I want to go ahead and place a trade here on our, let me go ahead and place a trade here. This is on our signals trade. All right, signal. So this is, if you're picking up signals, this is the one right here. I'm not going to place a trade on this one. You probably saw it right there if you are connected. You can see it right here. Oh, by the way, Tyson, my apologies. I was supposed to have connected you for Turtle. I do apologize. All right. I noticed that I just got a message from you. Yeah, we can connect next week. All right. And early next week if you can. All right. Here we go. All right, traders, let's look for another trade. I'm gonna skip the US dollar CAD rate for now. Um, let's go ahead and take a look at Aussie New Zealand dollar here. All right, let's go pick up a trade here on Aussie New Zealand dollar. Let's see here, Aussie New Zealand dollar. All right, here's one of the bonus trades that we go ahead and send out. And notice that the market's respecting that level. We're going to see a new bullish bias. But let me go to the 4-hour right here. Market's range bound right here. Oh, we come back to retest this area, but do we have enough to go ahead and sweep the low right here? 27 points. Yes, we do. Let me double check here on this. So we got this large range. We're probably expecting Aussie New Zealand dollar to push down a little lower right here. I'm going to go ahead and sell. Sorry. I'm going to go ahead and sell an Aussie New Zealand dollar right here. All right, there it is. Looking for it to come back to retest its lows. All right, I've got my wrist in place here. I can calculate, I can decide on how much risk I'm willing to take. Now, traders, I want to let everyone know all my trading accounts do have additional funds available to fund them. So when I do place trades and I do see that the risk is high, I already have calculated that I'm going to add new funds if the funds are needed. So I'm willing to take on more risk. That may not be everyone, but I want to make sure that you have the option, right? You do have the options. All right, let's go take a look at the next one right here. I want to look at is the pound US dollar right here. Let's look for a trade on the pound US dollar. So you can see that we've got a lot of indecision trading right here. Markets respect this level. We're back inside this range. This is how the weekly is probably going to close out. And I'm going to say that based on that, we're probably going to see the market come back up to these highs up here. Let's see here if I can find a trade. Oh, hang on. Wait a minute. You know, traders, based on the fact that the market really isn't giving us good, strong biases here, and we're just inside this. I mean, look at this. Wicks to the top side, wicks to the bottom right here. It's inside this very tight range right now, right? And based on the fact that it is there, and it looks like it's 47 pips wide. It's not really one. That's not really strong enough. But yeah, this is the okay. So this is the top, bottom. See here. We did sweep the high. So it's probably going to come sweep the low here and look to want to push higher. We got a breaker block right here. The price is respecting. So I actually am expecting the pound US dollar to go north. So let's go north on this. All right. So pound US dollar, I'm going to buy pound US dollar right here. And I'm now in a trade right there. And it's going to manage my position for me. All right. So we are trading the euro pound right now. We're going to keep watching that. But these are the two bonus trades on the Aussie New Zealand dollar and the pound US dollar. Now, traders, if you're interested in getting access to that trading tool, I want to go ahead and let you know that we are releasing that in an early next week. Releasing that. If you have not already connected to my my Instagram, my YouTube channel, as well as my Telegram channel, go ahead and sign up. We'll be sending all the information out there. Also, we have a free Discord channel. For those that don't know, we have a free Discord channel. You'll be able to get that link inside my Telegram channel right here. Here's the Telegram channel right there. And you'll see here, we do post a link here. And that is the link that you can go ahead and click right there. That'll get you into a free Discord channel right here, where you can get access to information that I post, videos. You got a chat here. You can communicate with other traders. So we do have a free Discord channel called the Traders Hub. Make sure you go ahead and sign up for that. If you're a member of Traders Network Club, of course, you're in our members only Discord channel, and that'll be obviously where you want to be. So there's the information right there, guys. Appreciate you guys being here. Do me a favor, go ahead and smash the like button, share, subscribe, and let's get this video out there. Those are the trades that we got right now. I hope to see you guys in the next video. All right, this is FxBigDog signing off.